Okay, now I said we are going to last as of last Friday. Was it on Friday or Thursday? I talked about the challenge we are going to be undergoing this month of February. So let's try this. Let's follow this confluences. Let's try it for at least one month straight. Theodora, you're welcome. Happy Sunday. How are you?
I'm fine. Good evening, boss.
Good evening. How is it going now?
Thank God.
That's good. So, like I was saying, we'll have to we'll have to go under a challenge for 1 month. I believe that everyone here have understood our confluences and understand how the US30 market moves, right? So I want us to start a challenge, a 30 days challenge. And that challenge, what are we going to be doing? We will analyze our trade, we will do our top-down analysis for the week, and we take trades once or twice in a week. We'll take trade once or twice in a week. So everyone, if you want to use live account, good. If you want to use demo account, good. But I want to make sure that everybody is trading, everybody is participating in the challenge, because that's gonna be a first step forward for all of us, that we are understanding what we are doing, right? If you know that you've understood to a certain level, you can go with live account, but you risk less if you want to be making money out of it. But which I know definitely that yes, we are going to make money within this month, because this was what I've been waiting, like, for this market to break this that resistant level, right? So now it has broken it, and I was very very happy. That was on Friday. The market get to 50,000, and I said this thing on our last class. If you guys could remember, I said it that once the market breaks here, it's heading to 61%. I think Theodora, you were in the class that day. I said it, and what happened? The market did exactly. This is our analysis on Friday, last week. This is our analysis. This is our analysis. I did not do anything here. This is our analysis. So what did the market do last week? The market came to this place. I told you guys that once the market comes here, we'll take it up to this level. If it breaks here, we are taking it to 61%. And the market will still refuse to break here on Monday. This happened on Monday. That's the first day of the week. Then Tuesday, the market gets here again, went down. It couldn't break it. What happened? On the Thursday, the market did the same thing. The market came here again. It couldn't break it. Touched up to 3 times or 4 times thereabout. It couldn't break this place, this zone. It now came on Friday. It now came down again on Friday. It now tapped. It now tapped us at the trend line. It now tapped the trend line. If you guys can see clearly, it just touched the trend line, and now what? Move up. And if you watch the trend line, what did the trend line give us? You see what it gave us? It came here, it gave us engulfing candle, which I always say. This another one here, engulfing candle. If you are taking note of these things I'm saying, there is no how you'll be here, you will not be making money. Whether demo, if you are still practicing, you will not be making money unless you are not following my instruction. This is what I'm showing you guys. This is what I always say. This is our entry. This is our entry confluences. This is trend line. This is trend line. This is a key zone. This is a key zone. Sorry, not a key zone. This is a psychological level. It's also a key zone. Yes, it's also a key zone because if you look back, you see that there is reactions here. There were reactions here. It's also a key zone. Like up to 3 reactions. Right? Other things here. If you are seeing something like this, I hope you guys can see my screen. If you are seeing something like this, let me teach you guys one thing now. If you are seeing something like this in the market, so if you draw something like this, line like this, and you come here, and you are seeing something like the market broke it a little bit, went up, come here, broke it, broke it a little bit, touch here, this place went up, came here, touch here, broke it, come here and went up. You see, also came here, touched this trend line and went up. So all these things you are seeing, this thing now is liquidity sweep. These things you are seeing, liquidity sweep. So this thing you are seeing, liquidity sweep. Now, how do you take this kind of trade? Once you know that the market has touched here, what do you now do? You have seen your engulfing candle. You enter your trade. Once you see that the market has gotten here, touch this zone, retrace a little bit, you enter your trade here. But what I do, because I've already mastered it, that's why I catch it here. That's why I always catch it at very, very, like, it's just like a snapper entry. Once it touches the trend line, I will use a very low stop loss. I will use I might do my stop loss like this. I might bring my stop loss something like this. That even if he hits me out, I will still enter again. But if I'm lucky enough, it does touch here, piam, when it goes up. That means I will now leave the trade. Once it gets here, retrace a little bit. I will already be on massive profit, and I will just break even. Once I break even, I will now allow the market to play out. This is what I did on Friday. And I made up to $7,000 on the account that I'm trading on. Just only on Friday, I took 2 trades, this trade and this trade, last week. Just 2, 1, 2. Because I said I'm not going to take any trade if the market didn't break here, or if the market didn't come here again, touch here again. If the market didn't come back to the support level, I'm not taking any trade. I'm not interested in the selling. I'm not interested in selling anything. I'm interested in buying. So when the market comes here or comes here, I will look at it, take my engulfing candle and enter. That is how you trade professionally. You trade with confidence. You trade, you don't panic. It builds your confidence. When you trade according to your confluences, you trade with confidence. And when you wait for the trading to come to you before you enter, you trade well. Trading, you don't need to be pushing yourself to trade. I want to trade every day. You mustn't be trading every day. Market is not meant for you to be trading it every day. Sometimes market will just be misbehaving, running up and down, running up and down, running up and down. So it's good for you to understand it, understand how trading works before you choose if you want to be a trader or if you just want to be playing around, losing money back and forth. So this was the trade that we took. This was the trade. This was the analysis that we did last week, and this was the trade I took. These two trade for last week. These two trade. If you still take trade here, you would have still made profit and close here. This is around. This is still a support. This is still a support level. That's why I told you that this is manipulation. But once the market comes here, you just liquidity sweep. You just want to tap us in from this trend line and goes up. So if you check it from here, from this place to this place is about 700 pips. Only this trade can still give you it can still give you money. But can you wait for this trade to come here? Or can you wait for this trade to get here before you enter? So I want us to embark on the challenge, all of us, so that we know what you are doing every day. Every day, analyze the trade. Every week you analyze trade drop, and we are going to be taking our trade only on 1 hour. I want us to try this thing for 30 days. We are going to be doing it only on 1 hour, right? Only on 1 hour. That's when we'll be taking trade. On 1 hour, if we see engulfing candle, I hope we all know what is engulfing candle. Is there anyone here that doesn't know what is engulfing candle is? Eh? Answer. Let's communicate, please. Is there anyone here that doesn't know what is engulfing candle? Hmm? Chukwemeka, do you know what is engulfing candle? Do you know how it appears? Do you know what is engulfing candle? Okay. How about you? Theodora, do you know what is engulfing candle? Do you know how it appears? Do you know how to take the trade? You know. Okay. Very good. So I I believe that everyone understand how we take trade and our confluences that we use to take trade. So now we are going to be embarking on a 30-day challenge. If you don't have demo account or live account, get one for yourself. I will monitor it personally. You don't trade any other pair. After the week, when we will have our meeting, our advanced class meeting, each and every one of you will send me the screenshot of your trade for the week, the history of your trade and the trade you took, whether you are using phone, whether you are using laptop. So I will analyze the trade. Once I analyze this trade, we'll analyze the trade together, right? After analyzing it for the week, you get $10,000 demo account. Get $10,000. If you already have another demo account, just delete that one, get a fresh demo account, because this is going to be specifically for US30. Please, it's specifically for US30, the pair that we are trading, and this challenge is going to be for this challenge. So get the demo account, $10,000, and the lot size that you should use is 0.05. And my expectation for the month is at least that account, we all should have made at least 10% of that account, of that 10,000. 10% of 10,000 is how much? Is $1,000. Is that understood? So if you have a demo account that you have been trading, you can keep that one side, but for the sake of this challenge, get a new demo account. I want to see how progressive we are going, because this is second month. This is second month, right? So I want to see how progressive we are going, whether we are understanding what I've been teaching or no. Because when you are teaching and nobody is understanding, nobody is putting in work, that means there is a problem somewhere. Is either it's from the teacher or it's from the student, or maybe probably I'm not passing the knowledge the way I should. So I want to know. I want to know that I want to make sure that everyone is going to participate in this our challenge. So for those of us that are at work, I'm still going to drop the link. I'm still going to drop the link for some of us here in Cyprus. Some of them work on Sundays. So I will still drop the link for them after they will watch the video, and I'll follow up with what we discussed. Right? So that's gonna be that. Is there any question regarding our confluence, regarding the charts or anything? Is there any question? Is there anything that is confusing you? Whether is a fib level. I talked about the fib level, the settings and all of that, how to put it. So is there another thing that is kind of a confusion to you, so that we'll know where we'll tackle the situation? Okay, go on. Where I took my trend line. Okay, let's move down to false. This is okay. No, this one. This this was our this thing, our last week analysis for the week. This is where I took the trend line from. You see, where I took this trend line from. Because of what? I took this trend line because I do top down analysis each time we analyze. Our analysis is always a top down. It is not just from 4 hours. So when you start, for instance, now when you start analyzing the market, let me look for a blank. No, I don't want to use this one. I think let me use this one. No, no, no. I can't use this one. Let me use this one. So now this is our, let's say for instance, this is our chart. Now you came to your trading view. You want to analyze the chart. Now it's very simple. It is not difficult. You have to analyze the chart. Now you have come. This is monthly. This is monthly. You come here. You see that, okay. Now this is monthly. What are you now looking at? You are looking at, okay, this market has been going like this, 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 going like this. You get, you know that, okay, the structure of this market is uptrend. First of all, as a trader, if you want to analyze the market, you have to identify identify the structure of the market. Once you identified once you identify the structure of the market, what do you now do? Now, you now mark out your zones, your key levels, your key zones. What are my key zones here? Now, I've seen that this market now, number one, I've already seen that this market is going up. What do I do as a trader? Now, remember, we are still on the monthly, right? Now, I'll mark out my zone. First one, this is the highest level. And I'll look for the lowest level, which is this is the highest high. And which I'll look for the lowest low, which is this one, right? I'll go to weekly. I'm done with here because what I'm interested in is this and this for the monthly. What do I do next? I come to the weekly. Now the weekly, I have seen that okay, the weekly, there is nothing much here on the weekly, right? I will move down to the daily. I'll move on to the daily to see a clear view. Right? To see a clear view. Now, once I move down to the daily, what do? I will just check. This market just dey go like this, just dey go like this. For instance, the market just dey go like this. So now, is it not best for me and my confidence is I should bring out my trend line? This is what should come to your mind once you come to the daily. Okay, now you bring out your trend line. Let me draw my trend line from here and push it to here. It has to touch like two or three places to be confirmed. You understand? So now you have drawn your trend line. So what else are you looking out for? You now say, okay, now this market now, what did this market do? This market reacted this place. There's reactions here. You will now bring your rectangular here. The market reacted here. Then the market came here again, reacted. There is reaction here again. Right? Reaction here. There is reaction here. There is reaction here. So now, this is what you are interested in from here because remember you are starting from the monthly, weekly, daily. Then 4 hours is where you stop it. And as a what's it called? As a day trader, you analyze the market from 4 hours. Normally, some people analyze the market from 4 hours, starting from 4 hours as a day trader. But we, as US30 traders, whether day trader or swing trader or intraday trader, we still do our top-down analysis. We still analyze the market from the monthly, weekly, daily, and end it with 4 hours. Right? So now you have done this. You will still have to move down to the 4 hours. This is where we are going to stop it from the 4 hours. Now we have gotten to the 4 hours. This is the last bus stop. Then we'll use 1 hour to wait for our entry. Right? So now you have seen this. What should now come to your mind again? Okay, now you have mapped out your zone. This is the highest level the market went to. This is your zone. And mind you, the market broke this on Friday. It was on Friday that the market broke this level. Right? So now, what else are you going to look out for? You bring your fib retracement, your fib level, to know the next reaction of the market. Is that clear? To know the next reaction, where the market will come and react, and where you are going to be entering the market once the market comes there. right? Now, what do? You now check for the previous low. You are because we are analyzing from 4 hours. You check from the previous low. This is the previous low that generated this high, right? You now drag, you take your fib retracement, you now drag it from here. First of all, you drag it, and come here and stop it. This is the highest place, where the market is currently, until Monday, until Sunday, this night. Then what do you now ask yourself again? Now, remember, I told you guys that 50% and 61% is our major concern when it comes to fib retracement. We are interested in the 50% and the 61%, where the market reacted. So now you see that from starting from here to here, the market reacted at the 61% and the 50% level, right? Now, what else are you looking out for? This market now came here, touched here, couldn't break this place. This is the highest it can go. This is 50,100. So next place we are expecting this market is 27%. 27%. What do? You carry your this thing, your rectangular, you draw it. Now you have seen that the next target of the market is 27. 27%. 27%. Once you do it, you come delete your fib level again. Now you have gotten the major one. This is the major one. Then the minor one again. You will now see that, okay, now that the market has broken here, it has now become a major zone that engineered this high to break this resistance level. Am I making sense, please? Am I making some sense? Right? So you've already seen that, okay, now the market has broken. What caused the market to break this low? This support is what caused this market to break. And if you watch here, the market has not been broken. Now this thing now it becomes a major concern to you. If na Trump, he will say that, how does he even say Nigeria? Say Nigeria is a point of interest, something like that. Now here now becomes point of concern. It becomes your point of concern, because this thing now you are seeing now is what break here now. If it doesn't break it, that means other things are still the same. It's just like every other candles here. But this thing now break it. That's why here now becomes your major concern. So what do you do next? This thing I'm telling you guys is when you are analyzing for the weekly, when you are doing weekly analysis. So you now come here, take your fib retracement again. You take it from here, right? You drag it, you drag it, and come here. Now, have you seen something? That the next place that the market is going to hit again, 26. Remember, the major one is here. I drew it. It is this one, the major one. But before the market will start, the market cannot just run and get here. It will be dancing, to be doing all sorts of things. You understand? So the market, you see that, okay, now you have drawn your fib level to this place. Now you are seeing 50% fib level. For sure, Monday, the market will retrace a bit. The market will retrace. It might even come back to this 80%, 50%. Depending, it might come back because on Friday, the market did up to 1,000 something pips, 1,300 pips only on Friday. Both London and New York session. London and New York session did almost 1,350 pips if I'm not mistaken. Right? So definitely when the market has such bullish, it always retraced. It always retraced. It always retraced. Take that as a note. It always retraced. It will retrace. It will retrace a bit. It might do something like this. Tap here. If here, you tap here again. If here couldn't allow it to break, it will push up. It will push up to this place. But we are not trading this kind of a thing. What do we expect? We are expecting the market to come to the 50% here. This is where we are expecting this market to come, or come to the 61% before we can say, okay, now let me now enter this market confidently. Understood? This is when you can now enter this market confidently. Then put your stop loss beneath it, because definitely I'm very much sure that the market will retrace a bit. Is either it came here, and if you couldn't break here, it will pull up if the bullish are in charge. That's why first of all, see your candlestick, our engulfing candle, before you enter. You understand? So this is what we are going to, this is going to be our analysis for the month, for this week. I've already done the top down analysis. I've already done the top down analysis with this explanation. So this is what is likely to happen. But if this thing doesn't happen, if there is enough, the market can do something like this. If it breaks this one, you see something like this, retrace a bit, then we'll take it up to this level. But what are we expecting from the market? Is a buy. We are not selling. This is two things that we are expecting from the market. Once you retrace a bit, you enter from here. You enter, put your stop loss, then allow the market to what? Do its work. This is around 728 pips with 123 stop loss. Understandable. Then if the market didn't do this, then we'll wait for the market to come here and do this at the 50%. Once it gets here, definitely it will try to push up again, but it is going to be best when it gets to this 61%. So these are the things you are looking out for. You see, it's better the market to even retrace. At least if the market can retrace up to 50% level or 61%, then we take it up. It will give us more pips. But if we couldn't break it, if it breaks it and retrace, this is what you are expecting. Is it understandable? Do you have any question? It's very simple to analyze the market, especially US30. But the problem is that, can you wait for the entry? Can you wait for the entry to come? This thing you are seeing now, I just drew it like this. You think that, okay, the market might open now. Boom, what you see now, piam, it will drop. It will drop and come here and start dancing. Till New York session or London session. If London session open, it might piam touch the 50% and pull up again, or touch the 61 and pull up again. So this is what you are expecting. So if the market should fall from here now to this place, look at how many pips sellers, those that are going to sell the market, look at how many pips they are going to catch. They are going to catch what? Up to 800 pips. But if you don't understand this, don't trade. They are going to catch up to 800 pips. There is always opportunity in the market. So don't trade. Don't trade sell, because you don't know what might likely happen. You don't know what might likely happen. So people that are going to sell this market is going to chop up to 800 pips. But we are not interested in the selling because we follow the trend of the market. We are only interested in the buying. So wait for the market to come to our entry, then we'll take it up. That is how we trade, and that's how professionals trade. Do we have any question? Okay, ask. Yeah, ask your question. Yes. Wait, I don't know if I'm recording this. Yeah, continue. Mm-hmm. Uh-huh. That's a very good question. I was expecting someone to ask that question. That's a very good question. Now, when you are trading from 1 hour, when you are waiting for your entry from 1 hour, you don't wait for the section. Once you see, you don't wait for New York section. Once you see that the market has come to your entry, London section, take the trade. Why will you take the trade? That trade that you take, before it will get to New York session, you might have already made a lot of profit, and what will likely happen is that the market might retrace a little bit just to pull the traders out of the market, then will go your direction. Do you understand? So once you see that the market has come to your entry, New York session, London section, take the trade, put your stop loss, then allow that trade to run. Once you see it, put your stop loss, allow the trade to run. So it's not necessarily, you don't need to wait for New York session to open. But most likely, sometimes, if you are trading a kind of swing trade, if you are doing swing trade, when you see engulfing candle, something like this, like what I showed you guys, something like this here, you see that what happened here. Let me bring the trading section. This is New York section. Let me show you guys. This is New York section. Sorry, I will use 1 hour so that I will see a clear view. This is New York section. So what happened here? You see that, you saw that now, this thing now is London section. You see that this market now gave you entry at London section during, fuck.